Hi, Jonathan York by Financial Partners, looking at investment markets. Really, where do we start? After overthrowing the regime in Venezuela, Trump has now turned his attention to Greenland. Now, he stresses this is for national security for the US and really wants to take over Greenland. To quote his words, they can either do that the easy way or the hard way. And obviously quite a bit of opposition because Greenland is part of a territory controlled by Denmark, which Trump just seems to have dismissed out of hand, and as well just riding roughshod over international law. But what is really quite ironic is that the lady who received the Nobel Peace Prize, Muchacho, has now gifted that to Trump. But Trump says he doesn't really care about it, and he's written to the Norwegian government saying that because you didn't give me the Nobel Peace Prize, I don't now sort of consider myself looking at peace options. Now again, the irony is that he wanted the Peace Prize and was so adamant on getting it, but then launches sort of aggressive action in Venezuela, and is now threatening aggressive action in Greenland as well. And Trump has threatened European countries now that who don't support him in his quest for Greenland, he will impose tariffs on them. And quite a few commentators are sort of ruling sort of parallels between sort of Putin's invasion of Ukraine and what Trump is potentially looking at doing in Greenland. Because on the face of it, there looks to be very little difference. Now also this week as well, you've got the Supreme Court looking at the Lisa Cook case, and that's going to be very interesting to see how that plays out. They are still going through the legality of Trump's ability to be able to raise tariffs. And then as well, just waiting to see, because he is attending a Davos Economic Summit this week, and it'll be very interesting to see what address he gives to that audience. Now on the back of the Greenland potential conflict, US stocks, bonds and the currency have all taken a hit. And there's been a big sell-off in all of those three asset classes. So it will be interesting as well because we get further data on the inflation this week. The Fed's preferred gauge there of PCE will come out later this week. But certainly the bond market seems to have given a pretty clear indication on how they feel about Trump's policies. That 10-year is well above that all-important 420, currently trading around 428. The 2-year is 360, and the 30-year is back up to 495. So again, as that 30-year approaches sort of 5%, that will have implications on mortgage rates, which Trump is trying desperately to push down. Now the Fed also meet next week, and no changes expected, and that certainly won't please Trump either, because he's really been pushing the Fed to cut interest rates more aggressively, and indeed if you look at it, that's potentially the motivation behind the charges laid against Fed Chair Powell. And quite a bizarre interview with US Treasury Secretary Scott Bessent in Davos. He came out and said, Trump's policy shows that the US is back. where most commentators just view it as sort of bully boy tactics. So it'll be just very interesting to see how it does play out over the next sort of 2 to 3 months. And then on top of all of that, we've still got earnings season coming through. Certainly the banks were pretty good last week. And now we've got Netflix and a few other important big blue chip companies reporting this week. And again, it's not just the earnings that will be important. It'll be the guidance going forward. Now, oil has backed off as Trump sort of came out and appeared to sort of put on hold any potential military action in Iran. So oil's back at sort of 58.60 and change. Now in the UK, Keir Starmer is still sort of reeling from Trump's sort of intentions on Greenland and potential for further tariffs on the UK if they don't support his intentions. And likewise for the EU as well. I mean, Trump is talking about potentially 200% tariffs on French wine. Now, the minutes from the latest RBA meeting in Australia, indicated that potentially the rate cutting cycle has finished, and they could even be looking at potentially a hike towards the end of this year. Although there was a little bit of good news on the inflation front, that did fall from the previous reading of 3.8 down to 3.4, which is obviously encouraging news. Now here in New Zealand, some very encouraging signs for the economy. Consumer confidence is up, but also as well, business confidence is up as well. Now, New Zealand PMI hits a 4-year high and really buoyed by construction. I mean, a little bit of good news on the food front as well in terms of inflation. That appears to be sort of falling a little bit. Certainly meat and sort of poultry was down, which was very encouraging. With the housing market picking up as well, obviously as those interest rate cuts start to filter through in terms of mortgages, etc., there is certainly a much better feeling about the economy going forward. Now, obviously, the next meeting for the Reserve Bank isn't until February, but at present, if this sort of momentum does continue going forward, there doesn't appear to be any need to be a further cut at the February meeting. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.